Hey, good morning. Welcome to the mortgage rate forecast with Scott Criss, your mortgage rates and news. It is November 3rd. Let's get started with the market. Here's what we have. Ouch, right? Market has been really trading off. We have seen a little bit of stability over the last week and a half, but been a pretty rough day. We're currently trading at $103 this morning. We are looking at some support below us. You can see these green lines down here at about 102.88 and 102.78. So as far as resistance, it's right above us at 103.9 and 103.22. As far as reports that came out, productivity, factory orders, none of those were bond friendly, did not help us. But we did get some ISM initial jobless claims, and the labor reports came out, which actually showed that inflation wasn't going rampant. That's always a good thing, and that helped the mortgage-backed securities as well. Euro stocks did really well. The UK has been working out the whole Brexit thing, and so the pound has been up in value. So none of those are bond friendly either. So you can see, I mean, when you look at the screen here, there is so much red. So we're getting a lot of pressure really pushing us down. Tomorrow we got to be careful too because the job reports are coming out. So to kind of quantify where we're at, Freddie Mac, as seen down below, sourced that the average consumer was getting a 3.46 rate and paying half a point for that last month. I should clarify, in the month of September. They haven't came out with their October report yet. So if the average consumer was getting a 3.46 at 0.5, and that's when bonds are trading on average about 103.80. Now we're at 103. Well, that's 80 cents difference in trading, which accounts for approximately 0.8 points for a mortgage. So a consumer that was paying half of a point is going to pay 0.8 points more than that. That's 1.3 points. So now to get down to this really good rate, the consumer is going to be paying quite a bit more to get there. So, average consumer, if they don't want to pay points, is going to be looking at rates, a little bit higher than that. So keep that in mind. Okay, what's the forecast? Here's what we got. Both analysts were pretty consistent on the short term. They're holding off pretty neutral, especially until the jobs reports comes out tomorrow. But very inconsistent on the long term. One analyst is really, you could tell by the way he was talking, he's really going a little bit more bullish. He thinks bonds are going to improve. Exact opposite. The other analyst says no. He's going short. He thinks they're going to sell off. He's going bearish. So, man, really a hard call on the long term. Here's my forecast. I think we're going to trade between 103.22, 102.78. That is a trading range, and we're exactly in the middle of it right now. So we could actually get a quarter of a point better or a quarter of a point worse through next Tuesday. That's my projection. So I don't know, man. It's anybody's call. I don't think we're going to get much better or worse, but let's see what happens tomorrow. I'll be in touch with you guys next week. Feel free to reach out. Hey, and we'd like to hear from you. Leave your comments down below. What do you think is going to happen in the next week? Do you think bonds are going to get better or worse? We'd love to hear from you. And everything likes to be liked, so does this video. You know what to do. And if it's your first time on the page, top left, you can click subscribe, and that will give you updates at least once a week on what's happening with the market and how it's going to impact you as a consumer getting a mortgage. And if none of this made sense to you, it's okay. Top right, click the little guy scratching his head. That will give you Mortgage Bonds 101 and how this trading impacts you as a consumer getting a mortgage. Anyway, that's it for this week. Have a great weekend. We'll talk to you soon. Bye-bye.